Welcome to Markets Now. I'm Michelle Rook with Brian Splitt with agmarket.net. And post the WASDE report, we have grains lower. The livestock futures are mixed. And Brian, let's talk about soybeans first of all. A little bearish in terms of the WASDE report for both Brazilian production and U.S. ending stocks being raised.
Yeah, so kind of a 1-2 punch there, Michelle. Number one on Brazil, and I think that was a big part of the focus of the trade, is how much does USDA come in and reduce the Brazilian production estimate for soybeans, especially after Conab reduced it this morning. And Conab dropped it to a number below 150 million metric tons. And so that kind of set the stage this morning, and beans were higher for a good portion of the morning until the USDA report came out. And USDA only dropped it by 1 million tons from last month, 157 to 156. So now you've got USDA roughly 6.5 million tons higher on Brazilian soybean production than Conab. And I think that's probably what's keeping beans afloat a little bit. But domestically, we also saw a bearish number for soybeans, raising carryout from 280 million bushels to 315 million bushels. And that was notable from a reduction in the export demand side of the balance sheet. So the Conab number was bullish this morning. The USDA number was bearish from both the Brazilian production estimate and the domestic reduction in exports.
So going forward, like you said, the Conab numbers offsetting a little bit of bearishness from USDA, but we're also holding, or at least bounced off, some pretty major support there in the soybeans from a chart perspective, didn't we?
Correct. So we have made some lows earlier this week in March soybeans, coming out of the weekend actually at 1179.5. Yesterday we traded 79.25. In between those two highs, we made a push to 1205.5. And so when we look at where we made some highs this morning after the Conab numbers, that was 1204.75. So we got very close to that 1205.5 level. The market needs to get above 1205.5 to confirm a double bottom. That would then turn the chart to technically friendly, especially when you look into the context of where these lows are this week versus the continuous chart. These are the lowest values we've seen since fall of 2021. That was at 1171.25. You've got the 200-month moving average at 1171. If you do the retracement on the continuous chart, and again, the continuous chart always shows the front month contract at any given time. But if you do the retracements on that chart from the lows in 2020, from the COVID lows, all the way to the 2022 highs that came after the invasion of Ukraine, the 62% retracement of that whole move is 1179. So that's where we went for lows this week. So I think with that major retracement level, with the low from 2021, about 8 cents below that, we're at some very major support. If we take that out, everyone's going to be talking about the May low on the March chart specifically was down around 1145. That would be the next objective. But if we can continue to hold 1170, especially with as bearish as the news was today, then you're going to start looking at the idea of, are the funds still being rewarded for being as short as they are? So that's something we need to monitor. But if we can get over 1205.5, I think that would confirm at least a short-term low.
I got to ask though, why is USDA slow playing these Brazil cuts so much, especially when you have these private estimates that are, down in the 135 mark on the low side?
Right. So maybe some of those 135 estimates you need to take with a grain of salt, because that's more of like a pro farm type of an agency. And you could make the argument that they're, trying to come up with low estimates to support values, to support farm prices. I've heard that argument. You could also make the opposite argument for the USDA. I'm sure that there's people on chat boards right now saying, this is garbage and they're just trying to suppress food values for the election this year. I don't know if that's the case either. And it could just be as simple as the USDA moves slow. When you think about how they adjusted the Argentine production last year in their drought, they were just slower than all the estimates that came out of South America. They eventually worked their way down to those numbers, but they were consistently higher the whole way down. So is USDA just slow moving on Brazil production? Will they come down more? I'd like to think so, especially when they're as much above Conab as they are. I wouldn't be surprised in the long run to see the total production below 150 million tons, but maybe it takes the USDA a couple months to get there.
Yeah, no doubt. And then the increase that we saw in ending stocks from the U.S. came strictly from a decrease in exports by USDA on soybeans, right?
Yeah, I mean, that was something that the trade really thought would be part of the domestic balance sheet, just because of how the exports have been the last several weeks. The weekly numbers this week included, we're well below the expected trade range. We're selling quite a bit of corn week to week now. We've done 1.2 million tons ish for the last several weeks, so that's good to see. So that the corn export program seems to be picking up nicely, but soybeans have really dropped off quite a bit. And part of that really, and well, maybe more than part of it, quite a bit of that is just simply the discount the Brazil beans have to U.S. soybeans.
Let's also talk about corn. When you look at the numbers that we got on South America from USDA today, let's talk about that and compare especially to the Conab numbers. When you look at Brazil production, USDA is still well above where Conab is, aren't they?
Again, right. You look at Conab, and they took the Brazil corn down. What do I have here? 3.9 million tons. They dropped exports 3 million tons, and that was down to 113.7. So again, you look at Conab's adjustment, USDA for Brazil corn, 124 versus 127 last month. So the number came down. 3 million versus 3.9 in Conab. So it was at least closer to Conab than what they did with beans.
Yep.
I'll take 3 versus 4 compared to 1 versus 6, right? Is what they did in the beans. So, and part of the narrative here too of what was a little heavy this morning was wheat. Conab did increase the wheat production. Part of that was the increase in yield. So their wheat production estimate went up 2 million tons, and that's what had wheat down this morning prior to the USDA release.
You bet. And of course, we did score new contract lows here in the corn market, but I got to wonder, is most of the bearishness you think already worked into this corn market because these funds are just so short?
So that was a big discussion, at our conference again, is the size of the fund short. And it's one of those things, Michelle, it's hard to know. You look at things in a big picture sense and you say, yeah, I mean, the funds are very short. Could they get a little bit more short? Absolutely. But in the very biggest of pictures, when they have this size of a short, historically, they will cover that short. They will go long. They may not get long 200,000 or 300,000 contracts. Maybe it's only 100,000, but there should be a short covering event. Same thing with soybeans. When typically they don't go short beans that much. So to carry 100,000 plus contract size short position is pretty hefty. So all we need is a catalyst for these guys to cover their shorts. And especially for the time of year, it's very atypical for them to be this short. A lot of times they will pound it and go this short after we make the summer high, right? So they're accumulating shorts into that summer high, that seasonal move, and then they really move it lower into fall. So for the size of the short position they've accumulated to be this time of year is out of the ordinary. So again, that's not something that means we need to bottom today or tomorrow or next week, but from a very big picture sense. Now, something that may keep corn on the defensive here and still push lower and maybe just have a sloppy to lower trade here is still what we need to deal with domestically. And that's that we've got a lot of basis contracts that were rolled from December to March. Those have to be priced or rolled again at the end of the month. And so there's a lot of bushels that are sitting out there that likely need to be priced or dealt with again. And so here's the decision from the producer is, okay, if I had a basis contract off of December, let's say as an example, and let's just say it was option price, it was, at board price, okay? Now all of a sudden, if you wait till first notice day to roll that basis contract to March, that was at a 27-cent carry. So instead of having a zero basis, now you've got 27 under the March. Well, now you look at the March-May spread, and let's say that's at 10, 11, 12 in that ballpark. I haven't seen what it's doing today. But if you roll from 27 under March now to out to May, and let's just say you do it at 10 under, it'll probably get wider than that if I had to guess going into first notice day. But let's just say it's a 10. Now you're at 37 under. It's probably likely to go to 15, 16 if I had to guess. And then if you do it all over again from May to July and have another 10 cents, all of a sudden you're 47 under the July. You're paying interest on the money that whole time. So there's going to be a reckoning here, and maybe quite a bit of bushels get priced in the short term. And maybe if we can get kind of that change of ownership from the producer to the commercial, we start seeing that commercial on the commitment of trade go from being long to then accumulating a little bit of a short position. That might go a long way in helping the market bottom as well, because that is also something that we typically see near bottoms, is the commercials being long on the commitment of traders report.
Gotcha. Wheat market, you mentioned the Brazil wheat production number up 2 million metric tons. Other than that, was there anything else in the WASDE today adding to the bearish tone that we see?
So similar, both corn and soybeans, or I should say both corn and wheat, had their domestic stocks up 10 million bushels. They were really, the trade estimates for wheat were looking for them to remain about unchanged. So an extra 10 million bushels domestically, with the extra 2 million tons out of Brazil, added a bearish tint to the wheat market today. And then again, that 10 million bushels in corn was in that food, seed, and industrial category. So they didn't touch exports, they didn't touch ethanol. It was kind of that weird food, seed, industrial category, and that was the only change on the domestic balance sheet.
Gotcha. I got to ask you one last question here about the cattle market. When I talked to you a couple weeks ago, you thought maybe the chart breakout was some sort of a bear trap. Do you still feel that way with the chart pattern the way it looks?
No, you know, we're consolidating for a while. I was thinking maybe we'd have one more push down where they'd catch some of the longs, but this has been a very aggressive trend. So we traveled in a little bit of a channel for a while in April cattle. Once we broke out of that channel to the upside, it's been nonstop. And also to get a sense of what I also said about cattle was that we broke out of a descending wedge. And when you do that, that gives you an objective of the upper end of that wedge, which started the downtrend. And so that in the April cattle is up in that, I'm trying to think of the price off my head, but I think it's in the 188.90 area. There's also a gap in that vicinity. So my thought was maybe we broke out of that falling wedge, saw a good pop, and we'd bounce back off a little bit and then make another surge higher eventually with that upside target. We just never got that pullback.
All right. Well, you're a great chartist, so it's always fun to talk to you about that. Brian Splitt with agmarket.net. That is Market Snap.